Investing in 2022. Warren Buffett shares tips on how you should invest in 2022. What's up, guys? Welcome back to Investing Insight, where we help you learn ways to achieve financial success and achieve personal growth. If you're new to this channel, feel free to explore. We have everything that you need in the aspects of finance, business, stocks, and real estate. Don't forget to like and subscribe to us and click that little notification bell so that you'll be informed when a new video comes out. Warren Buffett is an American business magnate, investor, and philanthropist. You might recall this as a familiar name. Well, we made a video about one of his most inspiring speeches ever, so feel free to watch that video after this one. He's the CEO of Berkshire Hathaway and is 91 years old and has been part of the company since 1965. Over the last 42 years of him being part of the company, his company has averaged a 20% per year return, while the S&P in the same time frame only averaged a 10% per year return. His return is double the rate of return of the S&P, and as I am sure you already figured out, that difference really adds up over the long haul, which is one of the reasons why Berkshire Hathaway Class A shares are currently around $490,000 per share and are up almost 86% in the last 5 years alone. Buffett's company is invested in many names that you would be familiar with: Apple, Progressive Insurance, Allstate, Fidelity, National Financial, Travelers, and many more, with a company that has a market cap of $700 billion, revenue of $276 billion per year, and $149 billion of cash on its balance sheet in 2021. His leadership and advice is extremely valuable if we are interested in investing. It may have just sunk in, yes, Buffett's company has $149 billion of cash available on hand that they are ready to put to work in future investments, which is why he and his team are always looking for the next new company for their portfolio. And he doesn't always look for well-known or large companies. He's looking for companies that have great potential. So now that you know why you should listen to Buffett's advice, let's jump in and learn from his great master of investing. In this video, Buffett will share with us the ways how to invest in 2022. So let's jump right into the 4 approaches that Buffett believes will be effective this year and into the future. The Buffett Munger approach was named after Berkshire Hathaway CEO and Buffett's longtime business partner and Berkshire Hathaway's vice chairman, Charlie Munger. The approach comprises of the following steps. Number 1. Understand the business. This is a self-explanatory step but is a very important one. Munger stated that we have to deal with things that we are capable of understanding. If you don't understand how investments or a business works, then how can you understand if you're doing the right things? It may be difficult for you in the long run if you invested in a company you have little knowledge on how they gain sales and profits. You must be able to understand what the business does before you invest in them. Never invest in a business or investment that you don't know how they make money or create value. Number 2. Durable competitive advantage. Munger states that the business must have essential characteristics that give it a durable competitive advantage. A durable competitive advantage is a factor that sets you apart from your competition. Once you have set your competitive advantage, this will make your business stand out more in the market, which will lead to an increase in your customer engagement. Number 3. Management, integrity, and talent. An INC article with Warren Buffett states that integrity is the most important trait to hire for, as integrity equates to trust, and this, added with intelligence and energy, make up a great hire for any company. Those 3 attributes must be in balance with each other because too much or too little of one attribute can either create a thief, a manager with low growth, or a terrible problem solver. Despite one employee's talent, they can never land a high-paying job if they are not trustworthy. and no company in the world would entrust their reputable name on an employee with no integrity, no talent, or both. Number 4. Ensure a margin of safety. There will be at one point in a company where purchases have to be made. In terms of purchases, leaders need to make sure that they're not overpaying for assets and are creating a margin of safety. The concept of margin of safety is that the investor purchases elements when the market price is relatively low compared to its essential values of the assets. Always look for the value. Every business and business owner should apply this principle to manage their company against any approaching loss. The Buffett Munger model is not widely known because of its simplicity. People deem it as a too simple approach to investments, but this approach never changes no matter what circumstance. Surely, 50 years from today, these 4 pillars of investments will remain the same. Buy something with built-in value or margin is a strong plan no matter what year it is. Being early in 2022, we're now facing many different adversities and challenges. Our stock markets are at an all-time high. Inflation is rising as well, as interest rates will most likely increase this year. Not to mention global unrest. Along with the 4 general steps of the Buffett-Munger approach, highlights 3 key factors that may affect a business in either a positive or negative way. Number 1. First up is the overvalued stock market. How can I even invest this year? Everything is so expensive. Active investors would have taken notice of lesser opportunities to buy undervalued stocks within their competition. What should you do is to accumulate and collect more cash and wait. Just wait, don't buy just to buy. You don't make money when you buy and you don't make money when you sell. You make money when you wait. Be patient and wait for the right timing, the right opportunity. Don't be fooled into buying subpar investments in an overpriced market. Stock is not all about collecting them all. It's all about doing very well. Number 2. Inflation. Currently, we have around 6.8% of annual inflation, and it could be a problem for us soon. As Buffett had said, in economics, you can't do just one thing. You have to ask, and then what? This will eventually lead to the economy catching up with the high inflation. Back in 1982, when the US inflation reached a shocking 20%, Buffett actually suggested which businesses the people should invest in. He mentioned that the business should have the ability to increase prices easily without fear or hesitation, and has the ability to accommodate larger dollar volume with a minimal additional investment of capital. These will definitely counteract the inflation, but one problem is where the prices of their business could increase and not lose any customers, and they could possibly look for a cheaper alternative. Number 3. Interest rates. The Federal Reserve has warned everyone that 3 hike rates are most likely to happen within the year as inflation rates continue to rise. Big money managers are not getting any returns in bonds, so this may affect them. The lower the interest rates, the easier it is for valuations to rise. This means that stock market valuations rise easily and there will be money flowing, lots of money. It may be predicted that the stock markets are eventually rising up, and the higher the interest rate is rising up as well. Never let the macroeconomic environment affect your own personal spending. 2022 will be an exciting year for all of us, and there will be no doubt that things will be volatile. But keep in mind what Buffett says, investment for the long term. Don't just focus on 2022, but think about investing for the long term. So, there's always next year. Thank you for watching this video. What are your thoughts on Buffett's model and factors? Do you have thoughts on good investments that are good investments during years with higher interest rates? Let us know in the comment below. And see you on the next video.